A short sell order is related to shorting a security. And that's a whole big practice around shorting and how to identify short selling and all this kind of stuff. But let's walk through how the actual order works and what's going on with a short sell order. So selling short or shorting a security is a practice that enables you to profit if you correctly predict that the price of a security you don't own will fall. So that's the idea. You don't own the security yet, you think it's going to fall, and you're going to place a short sell order that's an order that kind of lets you take advantage of that situation. So let's walk through an example to make that a little bit easier to understand how it actually works. So let's say you think a security is overvalued, and we're going to use dollars again in this example, again, use your currency. But let's say the price is at $12.50. You say, that's way too high, that's going to go down. So what you do is you're then going to sell borrowed shares, let's say at $12.40, the price you believe to be, at $12.50, that is the price that you believe to be inflated. So you're going to sell these shares, you don't own them, you're borrowing them, and you're going to sell them at that. And then you enter a short sale order for 1,000 shares, for example, borrowing the $12,500 worth of shares, 1,000 times $12.50 each, selling them on the open market and collecting the cash, right? So I'm borrowing shares, I'm selling them for $12.50, I'm collecting the cash, and then if the security price does indeed fall, you can use the next type of order to complete your short sale and make a profit. That's the idea behind it. It's a two-step process. Thus, the next step in the process is a buy to cover order. This is where they work together with short sellers. So a buy to cover order is, let's say the security did as you predicted, and if it did go down, it fell down to 10.50, right? So let's say it went down. You would place what's known as a buy to cover order to complete the short sale. Your buy to cover order would repurchase the 1,000 shares for 10,500 and return the borrowed shares to your online broker. That's kind of how it works, is you're returning these borrowed shares. And so you're purchasing them at 1,000, and because you bought the shares for $2,000 less than you sold them for, then you made a $2,000 gain, is the idea of using these numbers here as far as this example. So you're borrowing shares and you're selling shares, and you're doing in two steps as far as a short sell order and then a buy to cover order. And again, the whole point of short selling is you're looking at things that you think are going to go down in price. That's the whole idea, is it's a downward movement. So this is where your downward trend lines and things where indicators are showing a downward price move is where it's going to come into play if you want to sell short. Okay, some very important considerations with short selling. In order to sell short, you have to have what's called margin privileges in your brokerage account. That means you can trade with more money than you actually have in the account if you wish. This is the borrowing part. It might also be known as, it also is known as buying on margin, is the idea. And in effect, you're borrowing, right? So you're basically, using more money than you have in your account. You must maintain, though, enough purchasing power in your account to carry out a buy to cover the order on your short sale. So if I'm short selling something like for that 12,500, I need that amount to cover that. And that way, and where the margin part comes in, if the price of your short stock actually increases, remember, you're doing this thinking that it's going to decrease. You're really betting hard on that. But let's say it actually increases, doing the opposite of what you thought, and you don't have enough money in your account to buy the shares back at the higher price, in effect taking a loss, you will face what's called a margin call. Basically, it's a common thing. It's a demand by your broker to put more cash or securities in your account to be able to cover the trade. So borrowing money on margin, or leverage is another way of saying what you're leveraging your money, can really either accelerate gains or accelerate losses. So if you want to get involved in like short selling, it's something to be very, really develop your education around that even further, to get really in depth around short selling. The technical tools that we're learning here will help you use the indicators to identify short, downward trends and opportunities, but there's a lot of this, ordering part that can be a big part of that as well. And so it can be a challenge. So for example, in the year 2020, many people thought that Tesla, as far as a stock, it is a security, as a stock, so for example, was overpriced, was way overpriced, so they shorted the stock. This is way too overpriced, we're going to short it. But in 2020, ended up what happening was Tesla rose about 700%, just a huge amount of rise in that. And it read headlines like this, like Tesla short sellers have lost more than 39 billion betting against the stock in 2020. Because again, they're saying it's going to go down, and when it goes up and it goes the opposite direction, that's how they incur their losses. It's in effect the opposite of more traditional buying of securities, where I'm going to buy low, I'm going to let it go up high, I'm going to follow my upward trends, I'm going to sell at a profit. In this case, you're doing the exact opposite. You're betting it's going to go low. So just like if you buy and you think it's going to go higher and it doesn't, it goes the opposite way, you're going to lose money, is the same thing as selling short, just the opposite. I think it's going to go down. Boy, it didn't go down, it went up, I'm losing money. In fact, if it goes way up, I'm losing a lot of money. And I'm buying on margin and doing those things too, which is part of short selling, and with some complexity to it, then it becomes even more of a challenge. So again, short selling, is something to be a little bit more aware of as far as some expertise around there.